let's get live to Singapore and bring in Lorraine Tan, Director of Equity Research at Standard & Poor's. And she goes that a near-term pullback might be possible. Lorraine, good Monday to you. What do you see on the markets right now?
Well, the markets have actually been fairly resilient. I mean, we've had a good run-up, and I think the thing now is that it's digesting a fair bit of the news that's been going on. At these levels, I mean, one of the reasons we think there could be a chance of a short sort of pullback is because it has run up a fair bit, and I think it needs to digest some of the forward news.
Now, when you say pullback, we're looking at 5–10%. Is that what you're predicting, Lorraine?
Yeah, probably, around 5%, perhaps, a little bit more, because in Asia we tend to be a little bit more extremes on the ups and downs.
Okay, well, let's talk about oil, because I really want to show you what's happening with oil prices. We're looking at $110 a barrel. I mean, that's the highest it's been since 2008. And you yourself have just recently reversed your call now to oil to overweight. Is that right?
Yeah, we were overweight pretty much, up until, the end of January, and the strength of what's going on really sort of took us aback a little bit, but I think that's partly to do with the problems in the Sudanese supply as well. So looking ahead, and given that the U.S. recovery is now being factored in, we do think, because geopolitical risk is still pretty high, that it's probably a good bet to go overweight energy, at least for the near term.
Okay, so you're raising it to overweight, but some say with oil prices back up at these levels, isn't that a reason for a bit of a sell-off and also for economic growth to come down, being crimped again by inflation?
I think that's going to be more the case in Asia than it is probably in the U.S., for example. And I think the U.S. recovery is pretty much leading, is keeping things positive globally at this stage. So I think for Asia, the worries will start to flow through towards, I guess, the latter half of this year, towards the end of the year, when inflation does start to creep back in. But I think at the current levels of activity, inflation is still a fairly muted risk at this stage.
Okay, so we're overweight energy. What else are you overweight on?
Well, we've actually still overweight the real estate sector. I know that's run up a fair bit on a recovery pretty much, but we think there's still a little bit of room to go because valuations are still pretty comfortable. I think with the liquidity that's coming through, I think there is a chance that we're going to start to see real estate sort of demand creep up, particularly in places like Hong Kong, where supply is really not that ample.
Right. That's correct, and that's why we're paying such high prices. Lorraine, you're also reducing your banks weighting, by the way. I think you were overweight on banks. Now they're market weights. What are you seeing? Does this mean that you don't have much confidence in the Chinese story?
No, I like the Chinese story. I'm just worried at this stage for the banks that they may start to look at raising capital a little bit. I mean, the Chinese economy, in our view, will see a soft landing. So I think ultimately that takes a lot of basically the negatives out of the risk of defaults, etc. But having said that, I think if you look at the way that deposits have been lagging loans growth, I think it does put some pressure on the banks to start to see what they need to do to shore up capital, particularly if they have to maintain a certain level of loans growth.
Okay, one more question for you, Lorraine. What about the ongoing sovereign debt crisis in Europe? How much is that factored into your analysis, and how long are we going to live with Europe like this?
Yeah, I think the key for us is that, we believe that Europe's going to see a shallow recession. So as long as it's not a deep recession, I think much of the negatives are factored into the markets already. I think sure there's going to be an overhanging sort of ongoing debt situation over the next couple of years, because we still expect, more than $1 trillion worth of refinancing to happen over the next through 2014, essentially. So it'll still be very, very slow growth, but as long as it's not a deep recession, I think the global markets at these levels are okay.
All right, Lorraine, good talking to you. Enjoy the rest of your week. Lorraine Tan of Standard & Poor's.